Well, hello, everybody. Welcome to the Elite Real Estate Podcast. Very excited to have another guest on today with us. And as I get ready to bring him in, I want to just again thank everybody for listening, for subscribing, for liking and subscribing. You can find us everywhere you find podcasts. You can find us on YouTube at the Elite Network and find these videos later as well, too. So not only do you have us on podcast, but you have us on video as well. So good stuff. And I appreciate the feedback and appreciate everybody downloading and subscribing to the Elite Real Estate Podcast. So without any further ado, I'm going to bring my guest on, Mr. Chris Lento, my friend. How are you, sir?
I'm good. Happy to be here, Jimmy.
Oh, this is awesome. This is awesome. I'm excited that we finally get to be face to face a little bit. We've connected via email a couple times and been able to catch up that way, but super excited to get you on here and have this conversation. So, I want to let you dive into it a little bit and just give me the backstory, because your backstory is incredible. First of all, that it's kind of like real estate agents. Nobody actually planned on being a real estate agent,
Right.
but here we are.
Yeah, no, absolutely. Yeah, no, I graduated with a mechanical engineering degree and started working in the Boston area for a defense company. And, I liked the job. It was right aligned with what I wanted to do with my career, or what I thought I wanted to do. But quickly, I'm renting an apartment here in Boston with some friends, and it's kind of a dump, and we're paying a ton of rent. And I'm like, oh, there's 3 of these apartments, like all stacked on top of each other. And like, who owns this? How does this work? Like, could I own, immediately I was interested. And so this was in 2000. So there's no podcasts or, the internet was there, but it wasn't as, full of self-help stuff as it is now. And
Right.
so I just started reading books and talking to brokers. And then I put together a model and started going to open houses and touring properties. And then a year and a half, 2 years later, bought a 3-family with an illegal in-law apartment in the basement, in like kind of a less desirable area, but that turned around kind of near the airport here in Boston. And I moved into that, and then I fixed it up and, moved into another unit. And then a couple years later, I bought another one, and I really liked it. But I saw it as like a retirement augmentation or like a side hustle kind of. It wasn't a career. But then as I kind of advanced in my career, and I sort of saw where it was going. I was in DC for a couple of years working with the government. I can kind of see the whole sort of military industrial complex.
Sure.
And it was just so big, and it was so kind of intractable. And I just wanted to be more impactful, like have more agency over, how I can shape things. And I started ramping up the real estate. This is probably like 2013.
Okay.
Started 1031ing some of my properties, or tax defer exchanging them into bigger properties out of state. And then sort of slowly through talking to people and, self-education, came upon the syndication model and convinced myself that it would work through a number of personal investments. And then went out on my own in 2017 with EM Capital. And now we focus on 100 plus units, $15 million to $60 million acquisition price in the southeastern U.S. So I'm still in Boston, but I focus on the southeast,
Okay.
Carolinas, and Georgia mainly.
Got it.
And we partner with investors to buy these properties, add value to them, and then we usually hold them for about 5 years, giving our investors returns along the way, and then kind of move on to the next one. So we built a portfolio up to 850 units now with just our recent acquisition.
Wow, that's incredible, and incredibly fast too, by the way.
Depends who you talk to. Some people are faster. Yeah.
As a realtor myself, that's pretty fast, right? Like, because the idea that of what goes into it. Now, I know it seems like long for you, right? Because it's you're in it, right? And
Right.
so the other thing is, too, some people want to get in and that just instant coffee, right? That doesn't always happen that way. There's
Right.
a lot of
Yeah.
there's a lot of heavy lifting on the front end of this.
Absolutely. A lot of lessons learned. It's a business, and there's relationships that need to be built, and trust that needs to be gained, and partnerships that you need to have. So yeah, certainly it seems like at the same time, it seems like it's been a short 7 years, but it's a lot of ups and downs along the way, and a lot of lessons learned.
Yeah, 100%. And like you said, the dates that you're giving me here, right? And looking at back at the dates, you also went doing this in multifamily through a pandemic. So it wasn't easy.
Right. Actually, so I had properties through the financial crisis, the
Sure.
2006 through 10 or whatever that was, and through the pandemic. Right. Um,
So you've been punched in
and
the
the,
face a few times with these.
right. Well, actually, the first one, the great financial crisis or the great recession, what gave me a lot of confidence because, my
Interesting.
paper net worth dropped for whatever that's worth, but everything cash flowed right through it. I had sort of no problems. My rent was good. No one really moved out in that period. It wasn't like there was a big mass exodus. The Boston rent market is strong. I didn't have any increased vacancies. I paid my mortgage. I learned to value like longer term debt. I would have hated to have a loan mature during that. But otherwise, I just kind of sailed through. I wasn't really relying on it, so the fact that I wasn't doing deals didn't really matter that much because I had my full time job still.
Sure.
But it showed me the value of fixed rate debt. How valuable that is.
Interesting. So you didn't have a lot of people moving out because everybody was renting anyway. So the
Right.
problem with the downturn was everybody that was owning, right, was leaving because they didn't
Well,
want to own it anymore.
if I wanted to sell, I would be in trouble.
You would have been in trouble, yeah.
If I had to sell, right? Like if I had to refinance in 2009, I would have lost a lot of money because the
Sure.
banks weren't lending really, and they were foreclosing. If you couldn't extend. But I had
Yeah.
debt that went right through it. So
Yeah. And it's interesting because, you talk to a lot of investors, like, Robert Kiyosaki, right? Like I saw an interview with him the other day and somebody said he's $600 million in debt. And he said, actually, I'm 1.2 billion in debt. And I was like, wow. But he's like, but my cash flow is good, right? Like
right.
as long as your what's your cash flow doing? And as long as you can control what that debt looks like,
Yeah.
right. It's incredible what that back end looks like. So you got started this because you saw this is the incredible. So you saw a thing and it said, all right, I'm going to move into this crappy apartment because I have no choice. I'm just living here anyway.
Right.
And then it sparked you to say, hey, you know what? What if I just bought one of these and then rented it out?
Yeah, I was just like, this is like a mini little business that I was unaware existed. I mean, I was, kind of casually aware, I guess, in
Sure.
college of rental, the rental market, but I wasn't paying attention, I guess.
Yeah. Well, none of us at college age,
Right.
none of us were probably paying attention to
Yeah.
it.
Yeah. So I was like, and then I met my landlord. He was kind of a retired electrician and did all the stuff himself and was kind of a strange guy. I'm like, I can do that.
Right. That's one of those things. If he can do that, I can do that. Right.
Right. It was one of those things.
Yeah. So then you started the 1031 exchanges are interesting too, because and explain that to people what that means. Cause like a lot of people have heard it or they know what it sounds like, or somebody's mentioned it, but they don't really know what that means. So explain to people what that actually means.
Yeah. So what it means is you sell a property and you use all of the proceeds. So all of everything you get from the sale rolls into another property. So you buy another property. It has to be bigger and like kind or kind of a step up. So if it's a single family house, you could at a single family rental, say, you could buy another bigger single family rental that's worth more. If it's a single family, you could roll it into an apartment complex, like a small apartment complex. So I rolled a 5-family apartment complex here in Boston area into a 24 unit in Tallahassee. There's a couple of constraints. One, you need to identify the property that you plan to buy within 3 months of selling. And you can identify up to 3 properties. So basically on the day you sell, you kind of want to be lined up to buy almost before you sell. But if you're not lined up, you need to identify 3 properties that you're like gonna buy. And then you have 180 days to actually close on the property. So you have a little bit of a timing constraint, but if you sort of plan ahead, it's not too bad.
It makes sense.
And then the point is, so once you execute that, you pay no taxes on that sale.
There you go.
So all your tax basis gets pushed forward to the new property.
Yeah.
And you can conceivably do this, forever, as long as you never want to sell. And then, I think with the taxes right now, when you pass that on, like when you die, that tax basis gets reset. So you kind of like you you didn't have to pay all those taxes, but you're dead. So
somebody's going to pay the taxes somewhere.
No, but even the recipient, it resets your tax base. So the recipient will pay taxes, but not that massive tax that you've been pushing forward.
Right. And that's so that's like investing like 101, right? Like that's like, if these 1031 exchanges are phenomenal products and the phenomenal things that people just don't know about.
Right.
Because then you do worry about, like, if I hold on to this less than 2 years, then do I have to pay, other taxes and, capital gains taxes, like all the things that start to go about. And so again, as far as real estate goes, people that are listening, I understand, like, there's a lot of products out there. And like, when you find a specialist, right, or find somebody that does this stuff for a living, like, bend their ear. I can't tell people enough, like, start talking to people that do this, on a daily basis, because I've heard people, and I get people that'll call me and say, I want to invest in, real estate. And I'm like, do you? Like, what does that really mean? Like, what, are you an investor?
That means a lot of things, right?
It means a lot of things.
Yeah, no, that's been I've done that 3 times. It's been a great tool. And like you said, it's not that complicated once you do it a number of times. And there's plenty of experts out there that are willing to walk you through it. And that's become pretty basic at this point. There's a lot more complicated stuff going on.
Oh yeah,
that's a little more fringe.
Yeah, the 1031 is probably the easiest one to explain. Like, all right, this is how you do that, right? Like, it's pretty straightforward, pretty easy for everybody to do. And so how many properties did you say you have now?
Currently, we have 9 properties.
Okay. And then how many? They're all multifamily. Obviously, they're apartment complexes, right? They're not.
Correct.
You're not just holding on to like residential real estate here and holding on to 9 properties. And what's the advantage in your mind? Obviously, outside of, there's more people to rent and you're only paying one tax, right? Like, what's the advantage being in multifamily as opposed to being in single family?
Well, I think there's a couple of advantages. There's economies of scale. So, we just bought a 268 unit apartment complex in Georgia. So it's big enough that you can support a good size on-site staff. So we have 3 maintenance people. We have 3 leasing office people. So 6 people on the property, running the property. And because it's such a big property, that's not a huge chunk of the operating income. So you can effectively manage a large amount of units with very little input from me. I'm really managing the managers, and really managing that property versus managing like a 3-family or even a single family is, well, it's probably a lot more than a single family, but it's not that much more effort. It's certainly not much more than like a 30 unit. And then we have like our own landscaping team, so you have a lot more economies of scale. You only do the grounds once. You're not driving around to all these different single families.
Yep.
The other thing is, a lot of times it's harder to get single families to cover the rent, right? Like, there's a big demand to buy single family homes because that's where people want to end up, want to live their lives. So as an investor, you're competing with people who aren't necessarily price sensitive. You're looking at, like, I can rent it for this. I want to make this much profit. I need this margin, so I can pay X. Whereas your competition is like kind of just looking at their salary and saying, what can I afford? So I think it's the financials work better, with the larger properties because they're valued based on their rental income rather than just kind of what the area demand is.
Right. And so let me ask you this. So you're headquartered in Boston, right?
Yes.
How and why did you end up in the Southeast? Like, how did that come about? Like, for you to spread your wings and get down there?
Yeah, a couple of reasons. Well, so a lot of the major markets, like, Boston, New York, San Francisco, LA, like all the bigger gateway markets, they have very low cap rates. And what that means is that if you bought it all cash, what would you get for a return? So if it's a 5 cap rate, if you bought something for $1 million in cash, after your expenses and everything, you'd get $50,000 a year in return, which is, kind of low. And that's because, for a lot of reasons, there's a lot of money, there's a less constrained supply, big demand for these properties. And a lot of them are just kind of legacy properties. People are going to own them for like their whole life and pass them on. So they're not trading that often. And the Southeast is just growing a lot. A lot of population is moving from the Northeast, from the Midwest to the Southeast. There's a lot more standard properties down there, you can go and buy 100 unit where every unit is the same. They have the same heating system. It's 1980s built. You kind of can still replace them economically. So there's a lot more market down there. There's a lot more demand. And the returns are better. So you can get higher cash flow on the properties.
Got it.
So really it expanded my market. It you're with the tide. Like the population's going there. So you're kind of like moving along with the market. And that was just sort of my thesis. I wanted to go into markets that are really advantageous and have a lot of upside. And if I lived in one, if I lived in Raleigh, North Carolina, I'd probably buy local. But whereas I live in Boston, I didn't see a constraint. And I tested that out. So, I started, I bought a property in about an hour outside of Boston in Salem, Massachusetts, and I treated it like it was in Florida. I hired a third-party property manager. I visited it once a quarter. If there was some catastrophe that I used to, go deal with, I would call the property manager and we'd, handle it on the phone. And I really had to resist, like, don't go solve the problem. And then I turned that into an actual property in Florida, with hiring a property manager and, managing them. I talk to them at least once a week. We have a half an hour video call for every property once a week.
Okay.
And then usually we touch base separately about, something specific, more on an ad hoc basis. So, kind of got that process down of managing from a distance, and that's going really well.
I love it. And again, technology wise, and everything is sped up, right? Like doing this now, like, it's like my parents are still, with me, and like my mom just turned 80 and like she'll jump on a Zoom. I still got to tell her to unmute herself and do whatever, but she's, she could do this. So technology, to your point, you can scale this now. Like this is a scalable business.
Absolutely.
Now that you can have a massive reach, and not have to be on top of it. I think that's an incredible thing, because that was always the thing about investing, right? Like, wow, if I'm investing in something and it's 4 hours away, like how do I get to it, and how do I do? Well, I don't need to, right?
Right.
Yeah,
exactly.
Yeah. And it's incredible, your story, because like you said, you tested this, with a property a couple hours away from you, right? And again, it was probably more of a test for yourself.
It was
than it was for anything, right? Of letting go of that vine a little bit.
Absolutely. Right. Absolutely. Because you had to trust someone, right? You had to hire the right person.
Yeah.
And you had to trust that they were, going to execute in a way that you would like to execute. And you had to kind of let go a little bit. So no, it was definitely like, can I do this?
Right. Yeah. Yeah. And there is something to that. And what people don't understand either is, when you're talking about building a business like you're doing, and as soon as you hire an employee, that's when the pressure starts for us, right? As business owners, is when we start to hire an employee, because now that family's counting on me to make sure that they're making a living, right? And how do you handle that pressure? Because now you've got multiple units. Like you said, you've got a unit down in Georgia that you're employing 6 people, and now those 6 people are counting on you to make this thing work.
Yeah, no, absolutely. The good thing about the properties, though, is that, at least with that pressure, is that the property supports those salaries, with a good margin. So I don't feel tons of pressure that those jobs are gonna, be threatened if something doesn't go well. But on internally, like on people that I hired directly, because those properties that I have out of state, we hire third-party property managers. Okay. And they, we pay them a fee and they manage the property, but we do pay the salaries of all those employees.
Got it.
Through the property operations. So, they're technically employed by the property management company, but all their fees get passed through to us, all their salary, bonuses, 401ks, like everything comes through to the property.
Yeah.
But as far as my employees, there's pressure in that. And, it's just being confident in your business plan and executing and, keep moving forward.
Yeah. Yeah. And I think one of the most incredible things, like, and you mentioned this at the start of this whole thing, is like when you saw this happen and you saw this thing, it was like you instantly went into like, how do I just buy that? Why don't I just do that part? And what was your career before this?
So I was an aerospace engineer. So I worked on guidance systems for nuclear missiles, actually.
No big deal. No,
No, no,
no big deal. Guidance system for nuclear missiles, no big deal. Not a
right.
worry. Yeah, let me just buy. I would much rather just own a few apartments and figure out how I can make money doing that. A little bit less
Well,
stress for you, right?
I mean, it sounds cool, I guess, but you're building something that you hope never is used, right? It's like you're building like a car that no one's ever going to drive. Hopefully,
Yeah,
it can
hopefully.
get. Hopefully, it kind of gets. I don't know. There's like a strange psychology about it that was got a little old. You
Yeah,
know, like
I
you
can
spend
imagine
all
that.
this time and energy, and you're like, hopefully, this thing never gets used.
Yeah, yeah, and again, I can see where the stress, where no stress now for you is like, it's not, this isn't stress. I'm not making a nuclear weapon, right? Like
Right.
it's, I'm just investing in some apartments here.
Right. Exactly.
So much different. So it's incredible that you were able to take this in your knowledge base, right? Like your smartness from obviously being an aerospace engineer is not an easy degree, right? Not just
Right.
everybody can say that. But to take that and then put it into practice, it's something completely different. Was a big leap, right? That was a
Yeah,
big
it
change for
was.
you.
But a lot of it's project management, really. Like
Sure.
financial understanding, project management. I think real estate is also a relatively simple business to understand, right? Like there's demand from your renters, you collect rent, you have expenses associated with that. What's left over, you pay for the loan, and then you have your profit. It's not that complicated. I mean, there's appreciation you have to think about, there's markets. I mean, there's things that kind of the nuts and bolts and mechanics of it, but it's not like you have to, you know, convince investors that then we're going to kind of magically hit a certain number. And then we get some sort of like miracle economies of scale that I can't articulate right now. But once it happens, man, we're going to,
Right.
we're going to 10X. Like there's not as much faith involved in real estate. It's like, here's the plan. And here's like the 6 assumptions that I made. And I think they're reasonable because of this. If that all
Yeah.
works, it's going to work out. And if
Yeah.
interest rates go to 20, we have a problem.
Right. But we had a problem. They went to 9.
We did. We did.
Yeah, we had a problem when they were getting in close to 9. Now they're dipping back down, which is a good thing for all of us. But at the same point, you're right. This is one of the things. It's simple. It's not easy, right?
Correct.
What you're saying. Yes, the 1031 exchange. How do I roll this apartment complex into another? How do I take this five person or this 5 unit to a 10 unit, a 10 unit to a 100 unit, right? All those things. It sounds simple, but I want people to understand the planning and the timing that go into it, because that's the important piece, right? Do the numbers make sense?
Yes, absolutely. Like
Yeah,
making those assumptions realistic and not overly optimistic,
right.
and then executing, making sure you understand like how everything works, and you have a team in place that can advise you on the legal aspect of it, and the right property management team, the right asset management partners, where you're going to raise your equity. So yeah, there's certainly a lot of moving parts, but I think it's all graspable. None of it is like, "Oh, I don't understand that."
Right, right. Now let me ask you this: when you first decided this, so you were in this apartment, you saw a need, and again, there's been more multimillionaires made out of just finding a need and a niche
Right.
out of than anything, right? So you saw this idea of like, I could invest in these, I could buy the apartment, then I could live in it, then I could sell it, and then I could, you know what I mean? Like you found that out. Now, did you start shadowing somebody? Did you ask a bunch of questions? Like, did you find somebody that was doing it at a high level before this to bend
I
their ear?
did. Yeah, there was a guy that was probably like 5 or 6 years older than me that was doing it kind of in the neighborhood that I lived in. But he was like really scaling up fast, and he started a construction company to go along with it. And I was still thinking this is my like side job.
Yeah,
I had a real job. So it was I sort of learned from him, but at the same time, his model was not what I was looking for at the time. And it's kind of still not. Like I still like the idea of being an investor and not like a developer,
yeah,
where I can have a team that's running this property and I have to touch it and make sure the decisions are being made correctly and monitor the team. But for a given property, I could conceivably step away from it for 2 weeks and it's fine.
yeah,
Whereas a contractor or a developer is more like day to day. You need to be making sure things are happening.
Right. Right.
Um,
Now, would you say it's fair to say that you started to look at this for like a freedom at some point,
yes,
right? A freedom of
definitely.
like, I can just be at the beach one day and check on properties, and I don't have to really be at the property, but I can just kind of like check on them.
Yep, absolutely. Like a freedom of time. Yeah.
Yeah. Yeah. Which we trade off one for the other, right? We're either trading off money or we're trading off time.
Yeah. I
And then
mean, there's a number
which
of
one?
freedoms, right? Yeah.
Yeah, like which one
Right.
are you balancing here, right? Like, are we
But the key is
balancing?
to get a situation where you're not trading those things off, right? You're not
Right.
trading your time for money.
I love that. That's where I was getting to, right? Like that's the idea is how can I be this person? And like you said, like the person you kind of leaned on and talked to early went into like a whole nother business of a construction business. Like talk about another headache of a whole
Right.
nother thing. Like now I got this crew of construction workers to run along with being this investor and trying to make sure
Right.
all my numbers match up. So where yours was like, I don't want to do any of that stuff. I just want to do the investment part.
Right.
Yeah.
Absolutely.
Yeah. I love that. And so what would you say like the next 2 to 3 years looks like for you and your company, right? EM Capital is the company, right? And
Yep.
so what does the next, 3 years look like for you guys as far as like investing wise? What is your portfolio? Is it going to double, triple, or do you keep it the same? Where are you looking to do with it there?
Yeah, we're looking to grow. I mean, it's been a pretty slow couple of years. Like since interest rates went up,
Sure.
transaction volume in multifamily is down, 70% from the high
Wow.
in 2022. 2022 was a really big year, and we did 60 million in acquisitions in 2022, and then it's been pretty slow. And then we just closed a $50 million deal last month, and then we're closing a $11 million deal next month, and we're looking to close two more big deals this year. So, it's market dependent as far as is the equity out there looking for these kind of properties? Are the sellers adjusting to the new market and willing to sell at prices that work at current interest rates? Now, the interest rates are moving around, as we
Yep.
speak.
As
So,
we speak.
uh, which is, I mean, it's great. People like low interest rates, but what people like even more is stable interest rates,
Yes.
because then you can plan, you can underwrite. You don't have to change your underwriting every time you open your computer. But we deal with what we have. So yeah, we're looking to grow. We're hoping to add another 75 million in assets in
Okay.
2025.
And
So
just
we've got
this year alone.
this year. So we have 60 on the books, another 75 this year.
Okay. So
So
they actually
scaling
like
up pretty good.
125.
Yeah.
Okay.
Yeah.
Yeah, incredible. And your how so what's your group right now? Like your EM Capital group, how many people are that looking to scale this thing up to that number you're
Yeah.
talking about?
So we're just four people, but then I partner with two other groups that are similar to me. One's a developer here in the
Okay.
Boston area who has a good investor network, and the other's a group similar to me out of Baltimore. And we partner on capital raising, partner on sourcing, and partner on operations. We sort of each have our strengths. I'm sort of more the operational focused person. I manage the assets, deal with the property managers. I do source deals and I do raise capital, but I would say it's not my like strong suit.
Sure.
And then the other groups have their kind of sweet spots. So all in, we're a group of about 12, um, you know, full-time people.
Yeah. Yeah.
And we don't only do deals together, but a good amount.
Yeah. Yeah. No, it's incredible, man. And what you're building is phenomenal. I mean, just and again, scaling the numbers and thinking in my head about what these numbers look like for any number of you from 4 to 12 of you to be able to do this and to grow this and to scale this. It's you obviously have your systems and processes
Right.
down for
Oh
this,
yeah.
right? Like that's probably the biggest key for you guys.
Yeah, I'm a big process person.
Yeah.
So,
Well,
coming from the engineering world.
you're an
Yeah.
engineer. Yeah,
Yeah.
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 You and I are like yin and yang. Like, I'm the fly by the seat of my pants. I don't need directions. So you know what I mean? Like,
Yep. It takes every kind, right?
yeah, it does. It takes every kind. It takes every kind. That's for sure. So what is your what is your system? Like when you first look at a property, if I were to bring you a property and say, what do you think about this? Right? It's a 15 unit, but I'll just stay in the Boston or the Philadelphia area or whatever. And what does that look like to you? Like, what would be your first process for that?
Yeah, so there's a number of schools of thought on this, right? There's some people that say like, always make an offer, no matter what. Just make one that works for you.
Got it.
But I'm more, there's a lot of deals out there, right? So I think of it as a funnel. So my first funnel is it in a place that I'm interested in? So is it in, right now, is it in North Carolina, South Carolina, or Georgia? And is it a major metro area in those markets that's bigger than 250,000 people? So,
Okay.
so if it's not, if you were like some, high net worth guy that was like, I have a screaming deal in Philly, all right, I'm going to take a look. But if you're just a broker who's like sending me emails, which I get, hundreds a day,
I'm sure
that just gets filtered right out. Like I have someone who just comes in, Philadelphia, trash, auto response to the broker. Thanks. We're not interested in that market. These are the markets we're interested in.
got it.
Just done. So that'd be first location. Is it in a market that I like? Because you need to know markets to be able to assess. And learning a new market for one deal is just not worth the time. Like I said, unless it comes out of a strange direction, comes from someone who I trust that has said, hey, you got to see this one. Second would be price. So if it's not $10 million to $60 million, I'm not interested. If it's 5 million, could be amazing. It's just I know how much work it is to do a $5 million property. It's roughly the same amount of work as a $10 million property, and I make half as much. So 10 million and above. And then there's a number of other benefits of the larger properties. The lenders get better, the property managers get better. There's like the lawyer fees are the same for both of those properties. So there's kind of a scaling thing that happens. So third, okay, now it's in the right spot, it's in the right price range. What's the year of construction? If it's not 1985 or newer, I'm likely not interested. If it's not 1980 or newer, I'm not interested.
Got it.
Then it would be neighborhood. So, okay, now we start digging in a little bit. And it's got like 3 filters through, and now it's all right, open up justice maps and neighborhood crime spotter. And there's a number of tools you can get that show you like the area median income of addresses. What kind of neighborhood is it? Does the median income $25,000 or is it $100,000? Because that tells you kind of what you can expect out of rents. And then if it passes all those criteria, now I do a quick underwrite. So I load it into my model, come up quickly with a purchase price that I think would make sense with some assumptions. If that's within 15% of what they're asking, I'll make a call. Call the broker.
Yeah. And again, like that is that is just so detailed and spelled out, but it's so important because you can't just fly by the seat of your pants with these decisions, right? Like, you're talking about $10 million are getting invested or more, right? And so that's been a test over time of how you came up with this, right? And then now obviously through the growth, you're like, if it's not under 10 million, I don't really want it because now my portfolio that doesn't match anymore, right? So just
that wasn't always my criteria, right?
Right. It is. Currently it is, but it wasn't 5 years ago, right?
Yep, absolutely.
Yeah. So when did you start to was it immediately that you started incrementally increasing that? Or was it over did you get to 3 or 4 deals through and then you started kind of increasing that volume?
I think I realized pretty quick that, there's just a lot of advantages. Once you get above, depending on how high the rents are, 60 to 80 units, you can have an on-site person, meaning someone goes to work, has an office on the property, and you can have an on-site maintenance person. So you have 2 people whose job it is to lease out and manage and to fix your property. There's a huge benefit to that. And the property managers that handle those type of properties tend to be bigger, more professional, different layers of management so that, if they're sick, there's a backup, things like that.
Yeah.
So they're just easier to run. So, you depending on the market, that you almost back into that $10 million number.
Got it.
And you get better loans, you get cheaper loans. It's just an easier asset to manage than a smaller property. So once I kind of learned that, I was like, oh wow, okay, I can make more money and it's easier if it's just a little bit bigger. All right, now let's set the criteria at that level. So I would say I had 2 smaller properties, and I was like, man, I'm doing a lot. So, at a smaller property, if you want to get a roof replaced, you're likely maybe your property manager is going to give you some recommendations, but you're probably getting quotes for those roofs. On a bigger property, we just tell the property management team, hey, get us 5 quotes for the roof, put it in a matrix, we'll review it next week, and we'll talk about it. Yeah. And then you're sort of more decision making than doing the work, because they're just set up for that.
Yeah, because again, it goes back to like if you're the roofer on that, then I look at what my margins are. Right now, I need to bid on this thing. Where can I make the most amount of money and still get this job done? And I think that's one of the things that people really need to look at. Right? Is like, what are my margins at? Like you said, realizing that on a $10 million property, I can hire somebody full time to be there.
Yep.
Under that, I struggle to have somebody full time there because my margins become so thin that
you just can't do it.
Sense. Yeah, it just doesn't make sense.
Right. So now your property manager is just swinging by there.
Yep.
Right. So they're not
3 other properties they're looking at. Yeah.
Right.
Yeah. Interesting, man. Like that. It's so interesting to me because, again, like you said, you've got this formula now where it's just, this is what I look at. And if it doesn't meet these 3 or 4 things, like I'm out and I'm just moving on to the next thing. And I think there's a power in that. We talk about this owning a business all the time and with real estate agents in general and just business owners in general and entrepreneurs, like the power of being able to say no.
Yes.
I think is a huge thing for us business owners.
Yep.
Because so many times, especially when we're starting out, we're like, yes. I'll buy that. I'll buy that. We're just trying to we're stepping over dollars to save pennies. And
absolutely.
You know what I mean?
It's a confidence thing too.
Yeah.
Like you're nervous that you maybe made the wrong choice. So you need to do everything you can, take every opportunity. And then once you get more confident about it, you're like, okay, that's, there's not enough margin in that. Let's wait.
Yeah. Having the power of no, I think is huge for business owners in general. And so talk to me about too, like, and I know you said you have like a syndication model, right? So you're doing some syndication stuff. Explain to people what the syndication piece is, because I think that's important too, because people hear, again, that's another buzzword, right? Mm-hmm. We hear on the investor side, it's syndication and everybody wants to be in this syndication, but do you?
Right. Yeah, that's fair. So syndication, I'm not sure what the dictionary definition is, but it's really pooling investor money to buy something, right? So what we do is we have all these broker relationships. We're constantly evaluating properties, making offers. We find the property we like. We get it under contract. We then go out to our investor network. We put together a deck and we say, hey, here's the property. We've underwritten it. Here's why it's great. Here's what we're going to do to fix it up. We're looking to raise $5 million. Here's a loan we have, kind of everything you might ask. And then here's our business plan. And you're going to get, if you're projected to get 7% annualized cash flow, and then at sale, which is projected in 5 years, you'll get an all-in return of whatever this deal can support. And there's a range that investors typically in this space are sort of expecting. And then from their end, what they're doing is they're buying. So that that 5 million is going to come from maybe 40 investors. I think we average around 125,000 per investor right now.
Okay.
And they all get a piece of equity ownership in that property. So they invest, we buy the deal, we manage the deal, we pay them their returns, we give them their K1s every year, and then when we sell, we give them their capital back, and we give them their percentage of the profit. And again, that all kind of all in comes out to some annualized rate of return in the mid to high teens, and what they get is literally zero work. Like they're non-managing partners. They have no responsibilities. They need to evaluate the deal and then cash their checks. That's kind of their only responsibility, and they're limited liability as well. So if somebody dies on the property and sues the property, they're only liable for like their dollar amount invested.
Right.
So that you can't come back after them personally for anything. So you're really a hands-off passive investor, much like a stock owner to a degree.
Yeah, that's what I was going to say.
Just in a discrete property.
Yeah. And so, and where do you find your people that are investing with you, right? Like if I were to say, I want to invest, $100,000 with you, could I just walk in off the street and be like, here's 100,000?
Depends on the deal. Most of our deals, yes. Most of our
Okay.
deals are 506C deals, which means we can advertise. So like advertise on LinkedIn but in general, the way this space works is there's usually like a relationship. So
Right.
there's a different type of deal. It's a 506B. That means you have to have a prior personal relationship of some sort, meaning you've spoken in person a couple times. That's more like a friends and family and friends of friends, which is how I started with my investing. So, it starts with, your family and a couple of close friends or work colleagues that trust you. And then you give them good returns, and that's what sort of spirals out, and then you grow. If you're really in capital raising mode, you're doing, you're speaking at conferences, you're just networking a lot, getting the word out there, creating an online buzz. You want to constantly grow that community. One of the groups that I partner with does a great job with that. They're three guys, all from Nigeria, and they're in the medical community.
Really?
So they have this like Nigerian doctor that really, really works well, and that resonates. They can relate to this doctor group. It's a group that's not always targeted for investments, and they do a really good job capital raising. So having your niche too. I know a guy who is a ex-pilot, and his kind of focus is like pilots who want to invest. So they kind of speak the same language. He knows where the pilot conventions are, and might be a speaker at that about, hey, while we're on a break, here's some investment opportunities you might not be aware of. So there's a lot of people out there looking to place capital in not in the markets for obvious reasons, right? This week.
Yeah. One of the people that I actually had on my show was a dentist, and I didn't realize this. There's a whole group of, like you said, dentists that are looking to invest. That there's a podcast. I can't remember the name of the podcast offhand. If I remember it, I'll put it in. But that he was a former dentist that got into investing to get out of being a dentist, right? And now he's got this podcast that he does all these syndications with other dentists that are trying to get out of being a dentist. Like, I'm like, wow, I didn't realize dentists didn't want to be dentists so bad.
Yeah. Doctors
or pilots.
Dentists, yeah, like basically high W-2 earning jobs that take a lot of time are always good targets for investors, because you're like, they want to grow their capital. They don't have the time to buy real estate and actually manage it. It's just too time intensive.
Sure.
That's kind of a classic kind of target audience for investors. Now, I try to target my ex-engineering colleagues, but engineers are detail oriented. I have a couple of them that are close, but it's been years. They're like, what about this?
But on the off chance this one thing could possibly happen.
Exactly.
Right?
Yeah. Oh yeah. It's a tough crowd. I didn't realize that until I had a little separation.
You're one of the rare engineers that were having a good conversation, right? Like,
right. I ended up being a program manager. I wasn't nuts and bolts in the end, but
yeah. So, but no, it is interesting because, again, and I think you are right. Like, I think because a lot of people, to your point, and you brought this up early, was like getting some freedom built into this, right? And not being tied down to this job that I have to do for the next 30 years. Again, if I own a business, if I'm a dentist or a doctor or a pilot, engineer, whatever I am, and I'm locked down to this job for the next 30 years so I can collect my pension, which there's nothing wrong with that if that's what you are. But if you want to get out of it early, there's no pension, right? There's no, but then you've kind of discovered a new path to help get people. And again, if it's just passive income, they can just invest with you and let it sit and be passive. Or they could get involved like you did and start, making moves and doing some different things.
Yeah, no, absolutely. I mean, it's just a different avenue. It's also a great diversification, right? Like, there's stocks and bonds, and that's what a lot of people are only in. And then you have real estate, and you can buy REITs in the stock market, but they're very highly correlated with the stock market. Like when the stock market tanks, REITs kind of tank.
Yeah.
Because there's like a sort of, I don't know, correlation there. But these are largely uncorrelated, so
Yeah.
which is good for diversity.
Yeah, it is. And again, I said that what we're all looking for, I think it's like passive income, right? If we could all find some passive income that just, no matter what, there's going to be something coming in every month, right? And
Right.
and I can and I don't have to babysit it. I don't have to go watch it. Somebody else is watching it. It's paying for itself. That's the dream, right? To me, that's the
That is the
dream of
dream. Right.
just money shows up in my account. It's great. I don't know what's happening, but money shows
Right.
up in the account.
And I will tell you, as an apartment owner, owning apartments is not passive income. It's
No.
it's not a job like a daily, hour by hour, but it is a job. Managing these assets, even with property managers, is a lot of work.
Yeah.
Whereas on the investor side, that's truly passive income.
Yeah. Yeah. And I'm glad you said that, because I've had guests on here before and they said the same thing. Like, being a property manager or being a property owner is not passive income. Like, owning
No,
rental properties is not passive at
no,
all.
it's not.
It gets
Yeah,
sold as that, but it is not
it's not.
that.
I guess it can be if you're really underperforming and
Right.
have this miracle property or something, but you're constantly fixing some problem, making some decision, optimizing, holding people responsible and accountable, changing your strategy. Like we have a cell phone tower on one of our properties in Columbia, South Carolina, and I was recently talking to a guy who's got a lot of big commercial properties, and he was talking about how they always sell the contract right away when they get when they have like cell towers or
Okay.
billboards, because there's aggregators that are like rolling those up as investments, and they'll pay more for that cash flow stream than the next buyer will pay for it, because the next buyer is like a real estate person,
Yeah.
and they're like, okay, cell phone tower. They might even discount that. They might like not even fully count that into their purchase price. So we're in the process of selling the cell phone tower contract.
I got
My
it.
property manager is not doing that. Like we're
Right.
doing that. Like they're managing the property. We're
Right.
sourcing brokers, trying to figure out our strategy. When do we want to sell it, to who, that kind of thing. So it's just a small example. It's interesting too. You get to learn something different. I knew
Yeah.
nothing about cell phone towers.
Yeah. No, that's a whole nother, like, again, it's one of those other fingers of real estate, right? Like we talk about, there's so many avenues of real estate, and whether that's land to buy and sell cell phone towers, right? Somebody's buying them and somebody's putting them up.
Oh yeah.
And it no different than wind farms, and solar panels and all the things now that go into this. And I'm going to ask you that question too. Like, with these properties that you're buying, what's been has there been an impact of like this green energy of windmills or solar panels or anything like that? Have you seen any of that spark up at all?
I haven't. And, kind of as an engineer, I really like that kind of stuff, right? Like the idea that you can get energy for free or much discounted
Yeah.
with the better system. I've been trying to get solar panels on the roof of one of my properties for 5 years, and I just cannot get the math to work. Where the sun's great, like Florida has bad programs. They almost disincentivize you to do it. Areas that have good programs have less sun. There is kind of an issue with a lot of the apartment complexes, either are separately metered, so the residents are paying their own utilities, or we pay the say electricity, but then we bill the residents back for their portion. So
Yeah.
it's kind of hard to make the math work when we're going to have to spend $250,000 putting solar on, and we
Right.
kind of don't get the money, right? Like we'll be savings, but we're just going to pass it along to the residents. Will that pay for itself and make a profit? Maybe, maybe not. So the model is difficult, but I've been trying, and I think it'll get there.
Yeah. Yeah. It's pretty incredible considering how much it's pushed, right? Like, if you're watching the media and social media and all those things about green energy, and then it's interesting to find out it's really not that easy to get. One, and two, like it's you would think in a place in like Florida, right? If you're in the Southeast, if you're Florida, North Carolina, South Carolina, you would think, why not solar? It's sun here a lot, right?
Right.
This
Exactly.
would make total sense.
Yep.
Yeah.
Yeah. The
It's
solar, the energy suppliers in Florida have like a big monopoly, and they kind of
okay.
like write the laws, so it makes it hard for individuals to do solar,
Got
which
it.
is a shame. But just, and I'm sure that'll change at some point. But right now, that's a tough state.
Yeah. Interesting. It's interesting because again, we talk about this all the time. Like, how do I make this green energy? And the thought or the idea, I guess, out there is that the government will give you all this money and that everything's free and all this stuff. And then it's like, no, that's not really how it works.
It's not, yeah, right. Now I'd say like in some states, in Massachusetts, as an individual homeowner, solar's a good deal. Like it works
Okay.
because you're personally saving money. There's a lot of good tax incentives. Like it actually works very well in Massachusetts. I think it was one of the best states in the country, due to tax subsidies and
Sure.
but yeah, no, it works really well. But yeah,
But
a lot of the states that I buy in, it doesn't.
Yeah, but then in Massachusetts, like, I'm in the Metro Detroit area, so I would feel like like you probably don't get much more sun than we get here in Detroit, right? I mean,
Probably not much. Yeah, right.
yeah, probably pretty darn close.
There's definitely better places in the country where it should work better. It's just, it's different regulations, different incentives.
Sure. Sure.
Yeah, no, it's
very interesting. It was a very interesting conversation, though. That's for sure. Because you hear so much about it. Like, and then let me ask you this: what about so a friend of mine actually does. He was a salesman for charging stations, right? For the electric cars. Are those big at your properties as well?
So a Class A property, you start getting charging stations in, and we have 4 of them at our property in Baltimore, and we actually don't charge for them. So they're just like in the parking lot. They're like an amenity.
Sure.
And the problem is right now that there's just not enough demand for them where they'll pay for themselves. So they're more like a bonus. They're more like, you can put it in your marketing material that you have 2 charging stations. And really, I don't think they're used that much right now. So I think as the demand comes up for that will become kind of amenity. But the percentage of people that own electric cars isn't that high. And then the installation is pretty expensive. I mean, installing an electric charger that actually you can pay, like they pay for it, is like $15,000 or $20,000.
Sure.
Well, you can, for a couple thousand, you can install just a regular one that's just hooked up to the kind of the common meter. I want to think of it like that. So we do have them, but they're not revenue generators. They're like an amenity.
Yeah. Okay. Yeah. Well, but it's good though, right? Because you may have that 1 or 2 people that want to move into that apartment complex based on the fact that you have that now, right? And
absolutely.
They have I have electric car. Where do I plug it in? Well, I can plug it in where I live. Is a lot better than.
Absolutely. I mean, that's free gas, kind of. If you think about it, that's
right.
For that electric car owner, it's a big deal.
Yeah, 100%, 100%. And again, I can just plug it in and leave it overnight. I'm charged up. I'm ready to go the next day.
Right. Yeah, absolutely.
Even better.
I think that's going to be something in not long. I think that will be like a next value add for some of these bigger apartment complexes. We'll be putting in like 30 chargers, and like how we manage the, to make some revenue on that. Maybe, it's only people that pay an extra $100 a month get access to it, or something like that. But
sure,
that's coming.
Yeah, I mean, I guess no different than like if somebody, depending on what your rent covered, if for water or utilities, whatever those utilities would be, you could probably just price it out the same way, right? Like if it was an extra $100 a month, this is what you get. How many charging hours you get based on
right. And then I think that could be where the solar comes in, right? Now you put some panels on the roofs, it supports the solar charger, so brings the cost down. So I think there's something there.
See, we're onto something right here.
Right. Yeah.
We are onto something right here. We are onto something right here. So, well, man, look, we are rolling up. We got about 5 minutes left to roll into an hour here. So, but this is all a great conversation. Where can everybody find you? And where are you discoverable?
Well, so mainly LinkedIn. LinkedIn's the best way to find me.
Okay.
So either Christopher Lento on LinkedIn or EM Capital on LinkedIn.
Okay.
And then my website is emcapitalgroup.com.
Okay. And I will add all this stuff into the show notes too. So when you guys are listening to the podcast, all that information will be there and you'll be able to find him anywhere you are. So, well, my friend, I appreciate you coming on and spending some time with us and dropping some knowledge, because this is some big stuff. And I want people really, like, this will resonate with some people to really be able to to hone in on some things. And so let me ask you this one question, and this question I always take that. If you were starting out again today, would you follow the same path, or would it be a little bit different?
I think I would have jumped to full-time real estate investing earlier. So I really got the bug like around 2010, and I was taking some adult education courses in real estate at Boston University. And I took one of my professors out to lunch and was like, "Hey, I'm thinking about switching." And at the time, I was thinking like into a real estate investing company where I would have a job, not like going on my own.
Yeah.
And he like looked me in the eye and he was like, "If you have a salary, hold on to it." Like, that was the bottom of that market. He's like, "Are you hiring?" I was like, "Oh, okay." But I think if I had, if I had actually been persistent there, and maybe it took me 2 years and jumped out in 2012, I think that would have been a good move. But
Yeah.
other than that, I'm happy with the breadth of experience I have and how it's translated into my current career.
Yeah. Yeah. And again, spreading knowledge, right? And getting the name out there and sharing the information that you're sharing out here, I think is incredible. And I think look, the right people that will listen and the right people that will put this into place can have just as much success, right? I mean, it's just, but it's that system and the process. And I think that's one of the things that people need to understand, that this isn't a fly by the seat of your pants type deal. You are actually following a system and a process, each property that you're looking at this point.
Yep, absolutely. Yeah.
I love it. I love it. I love it. So, well, all right, Chris, I appreciate the time, my friend. I am wrapping this up, but again, Chris Lento, you can find him on LinkedIn. EM Capital is the company. You can find them everywhere. I will add those in the show notes. And again, my friend, I appreciate you. Any last words from you?
No, great questions. Good conversation. I was really enjoyed it.
Awesome, man. I appreciate the time. Guys, thank you for watching the Elite Real Estate Podcast and listening to us. We will be back soon.